Welcome back to the Machine of All Trades, Master of None. I'm the ghost in the machine, and the financial markets is where I operate. Yeah, welcome back to this edition of this video and a subtraction of your lack of knowledge of being or of having that knowledge to be successful in the markets. Yeah. So guys, we're going to learn about premium and discount arrays. Um, and yeah, I'm going to give an example. Um, about the premium and discount arrays, and the example with a simple structure that I've drawn myself, or an example from real price data from using hindsight, past the date, past price date, yeah, of the US 500 weekly time frame. Okay. um Premium discount Premium and discount arrays. Premium and discount arrays are the areas of fair value or pivot points or points of interest that the algorithm will reprice to. What did I tell you about fair value? Fair value is where, as a price level where the buyer and the seller agree to a specific price value of an asset class or specific asset class or security. That's what it is. It's where the buyer and the seller agrees on price and does that quick transaction immediately. Where smart money will be pairing its orders with other orders from the with other um um what can I say, the negating orders. If smart money wants buy orders, it will look for sell orders to do that transaction in the market. That's what I'm talking about. Yeah. So premium and discount areas are areas of fair value or pivot or points of interest that the algorithm will reprice to. So points of interest, I'm talking about the areas that we will use as our point of interest. Sorry. As our points of entries. Right. Yeah. To us, as traders, these arrays are entry points for market orders and trade. Yeah. To us as traders, these arrays are entry points for market orders and targets for partials and take profit. And the failure of those or that specific array, if we took an entry at that area, a specific number of pips or points below that area will be our stop loss. Let me start. The failure the failure of that specific array, if we took an entry at that area, a specific number of pips or points below that area will be our stop loss. So a specific point or a specific specific pips away from that area of our entry point will be our stop loss. That number of points or that number of pips that will be giving to ourselves will be a spread buffer, if I may say, to accommodate spread and other costs of doing business as a trader, like commodities. Oh, sorry, not commodities. Like oh Lord, those payments, those charges that are happening, commissions and spreads, whatever. Yeah, let's continue. Premium and discount arrays. Okay, this is an example that I drew to show you guys our premium and discount arrays in a simple structure using this tool or this line object, whatever. Yeah. Okay, this is our premium and discount arrays. I have drew them hierarchically or in hierarchy. Yeah, I don't know English that much, but yeah, in hierarchy. You get it. If you don't get it, you will get it. Don't give up. Yeah, in hierarchy. What do I mean by in hierarchy? In some order of precedence. If you don't understand that English, I'll explain that English into a layman's English, into our English, into me and you kind of English. You understand? Yeah. we have in our premium and discount arrays at the top of premium price levels. This here below here, this is the 50% of this, from this low to that high. This is the 50%. So at the 50% price level, that's our equilibrium level of this price action or price leg. You understand? So this 50% level, it's our equilibrium level. So above equilibrium level, that's our premium price levels. That's where smart money will view price at at its premium levels. Hence, it will want to sell whatever asset or security that it has at those premium levels at a profit. And once it sells an asset, once it takes a sell order for an asset or a security or an instrument or a whatever, it'll want to go and buy back that asset, security, or whatever at discount levels. You know, when you get in a store, what do you want? When you want to buy something, whatever that you want to buy it, you want it at discount prices. It's obvious. You can even ask at the till there, you're like, hey, my sister, can you give me a discount? And she tell you, you are sick today, my brother. There's no discount. If you want discounts, go at Forex. Yeah, so here that would be our discount arrays. This our B whatever, premium whatever. So at the top of our premium levels, we have our old highs. Like I told you, premium and discount arrays are going to be our areas of point of interest or point of entries where we want to take our entries at, or there will be our take profit levels. So we have old highs as our take profit levels or entry points at the buy side. So according to this example that I drew here, you can see that the market is in a bullish trend. Why is it in a bullish trend? From this low to this level, just this market price, current market price, the price has went up. It's bullish eventually. Quality has went up, went down, and broke structure to the upside, showing an interest of going to the upside. Hence, from this discounts levels, we want to see smart money. We want to see a sign of smart money taking its buy orders, going up, accumulating buy orders, doing its manipulation and whatever, and going to the upper side. Well, this is the machine of all trades, master of none. I am the ghost in the machine, and the financial markets is where I operate. I am the greatest trader of all time in this country. I am the greatest mentor of all time in this country, because I am the greatest that I've ever seen. I have never seen those others. Maybe if I see them, I will change my mind, but my mind is still stagnant, it's still solid, it's still static, and like, let's continue. I'm joking. Okay, we have our old high as our premium oversold whatever price level, and we have our rejection block. I'll show you our rejection block. It will be our week of those highest candle, that old highest candle that makes the old high. We have a rejection block which is made by that week. That week alone is a block by itself, where we have orders that we want smart money to negate, to mitigate, to whatever. I'll teach you about mitigation in the next future video. Next future, maybe I'm talking about the video that I'm going to post tomorrow. That's my future. One second from now is the future. Let me tell you, I'm about to arrive in the future. Let me show you. I'm in the future. You see? Whatever. Let's continue. Yeah, we have old highs, rejection block, we have bearish order blocks, we have supply zone, we have fair value gaps, we have liquidity void, bearish breaker, we have the mitigation block, others like inversion, fair value gaps, volume imbalances, balance price range. What did I put it in the others section? I put in the other section. Why? Because I want us to focus more on to this ones first. And yo and yo and the And when we get to premium, I think discount levels, the moment when we get immediately into discount levels, this is the order of our mitigations. Mitigation block, bearish breaker block, liquidation, liquidity void, fair value gap, FVG, VG, VG, demand zone, bullish order block, rejection block, order old low, others like whatever that I said. Okay.